Hello, everyone, and welcome to the NinjaTrader Ecosystem Webinar Room. My name is Juanita, and I work here on the NinjaTrader platform in the Denver office. We have a very special event for you today with Trader Dale. I would like to mention it is important to understand that there are substantial risks in trading commodity futures contracts. Trading commodity futures contracts. You should carefully consider whether such trading is suitable for you and will depend on your specific circumstances and financial resources. It is possible to lose all funds deposited with your broker and could even incur losses beyond this amount. Please inquire at the following link for a full copy of the CFTC risk disclosure, or if you have any additional questions. Also, please remember these training webinars are not a solicitation nor a recommendation, but simply educational in nature. This webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Any brokerage-related questions should be sent directly to our brokerage team using the following link. The NinjaTrader ecosystem website is home to hundreds of third-party apps and services, all centered around the NinjaTrader platform. With new tools added nearly every day, NinjaTrader ecosystem is home to hundreds of apps and services. You can quickly and easily find tools or services you're looking for with the simple keyword search. You'll also find information about upcoming webinars in an on-demand video archive to view previous event recordings. We are very active on Twitter and Facebook, so if you do use social media and you want to get all updates of NinjaTrader ecosystem daily, I would highly recommend you follow us on both of those. NinjaTrader is always free for advanced charting, strategy backtesting, and trade simulation. To ensure you are on the latest version of NinjaTrader and pick up a free live data trial, please use the following link. You're welcome to also lease or purchase NinjaTrader using the following link. And if you're just getting started with NinjaTrader, we offer free live training on a daily basis. You can view a schedule and upcoming webinars using the following link. We are very excited for this unique event in which Trader Dale will show us how to discover the basics of order flow trading. Thank you again for your attendance, and without further ado, it is my pleasure to welcome to the NinjaTrader Ecosystem Webinar Room, Trader Dale. Please go ahead and take it away, Dale.
Thanks everybody for coming here today. You didn't miss too much. I was just saying that the topic of today's webinar is the order flow trading setups, and there is quite a lot of things which I would like to cover today. So let's just go into it, and let me start by showing you what you'll get today. So the first thing, you'll get webinar recording after the webinar. Then as a free gift, you'll get my newest book, my Overflow book. Then as a part of that book, you'll also get a set of order flow live trading videos. Also, if you want to give a go of my software, then you can shoot me an email and I'll give you a trial of my order flow software. So, and if you have any questions after the webinar, shoot me an email and I'll be happy to help with any questions you might have. So what you'll learn today, first we'll go into order flow basics, then we will cover market participants, then I'll show you some tips how to make reading the order flow easy, and then the main part of this webinar will be the order flow setups. Before I jump into all that, I'll do just a brief introduction. So as far as my formal education goes, I have a university degree in finance and all those fancy trading certificates, but I don't really think that this should be the reason why you should listen to me today. I think that if you choose to listen to me today, it should be because of almost 13 years of real trading experience. So I started trading around 2008, and also I started a website, trader-dale.com, and also developed software which is mostly just a volume-based software, which works with volumes. It's a volume profile, VWAP, and order flow. Those are indicators for NinjaTrader platforms. And also I wrote 2 books. The first one was Volume Profile, the Insider's Guide to Trading. You can download that for free on my website. And the other book, that's the Order Flow Trading Setups. That's the book which you are going to get in today's webinar for free. So let's go into it. If it is the first time you see order flow chart, it may be maybe a bit confusing for you. So let me do just a brief introduction to the order flow chart. What you see before you, that's a standard order flow chart, and those blocks you can see there, those are basically candles with volumes displayed in those candles. So each of those is called footprint, and those footprints, they have volumes, those numbers, which are on bid, that's the left side of the footprint, and on ask, that's the right side of the footprint. Now, many people will tell you that ask means buyers and bid means sellers. If this was true, then the order flow would be a holy grail. Unfortunately, it's not a holy grail, but there's way more to it than just the buyers and sellers. So I'll go more into that in the next couple of slides. But before I go into that, let me just tell you what all those colors are all about. So just very briefly, if the cell, this cell, for example, is colored red, then it means that bid is bigger than ask. And this is supposed to indicate that sellers at this price level were stronger and more aggressive than buyers. That's why it's red, right? If it's the opposite, then it's green. If ask is bigger than bid, 84 is bigger than 68. That's the number of contracts traded at this price level. So that's why it's in green, all right? Because it's supposed to indicate that the buyers at this price level were stronger than sellers. But again, this is not entirely 100% true because of what I'm going to show you next. Oh, one more thing. If the footprint is mostly red, then usually the price is going downwards. It's a bearish footprint. If it's mostly green, like for example this one, usually it's a bullish footprint, right? So this means to indicate aggressive buyers. So that's just to get things started, but right now let's go into the tricky part. Let's start with the tricky part. So there are two kinds of market participants: passive market participants and aggressive market participants. You too can be a passive market participant as well as aggressive market participant. If you enter your trade with a limit order, then you are a passive market participant. And that's because you wait until the price comes to you, until the price reaches your limit order. And when you get filled, you are a passive market participant. Now, on the other hand, if you enter with a market order, then you are considered an aggressive market participant because you want to get filled immediately. If you enter with market order, you will get filled immediately. Maybe there'll be some slippage, but you'll get right into your position or out of your position. So for example, if you take stop loss, if you are long and if you take stop loss, then you actually enter a market position, right? Because you sell for market. You just need to quit your position right now aggressively. So those are passive and aggressive market participants. Now, let's talk some more about the passive market participants. Passive buyers, guys who enter the long trades, they appear on bid. That's the left side of the footprint, right? They appear in here. Those are passive buyers. Passive sellers, those guys appear on ask in here. Those are passive sellers. This is pretty important. So you may want to get back to it when you have the recording of the webinar, because this is the basics of order flow, basically. So that's the passive market participants, all right? Buyers show on bid, sellers show on ask. Now, this is where it gets tricky, because aggressive market participants, they are exactly the opposite. Aggressive sellers show on bid in here, and aggressive buyers show on ask in that footprint, all right? So I'll put it into one footprint. This is very important. And it tells that on bid, we can have aggressive sellers as well as passive buyers. And on ask, we can have aggressive buyers as well as passive sellers. And this is the tricky thing. This is what most people don't understand. And this is the basics of understanding how order flow works. Because, like, for example, look at those volumes, 166 contracts. And are those guys sellers or are those guys buyers? Now, if you look just at this footprint without any context, you can't really tell. That's the tricky part. You don't know if those guys are sellers or buyers. That's why order flow is not a holy grail, but you need to read the context. So let me give you a really easy example. Imagine the price is going upwards aggressively in an uptrend. And you see huge volumes appear on ask. Now, what is most likely? Are those guys aggressive buyers or passive sellers? Well, the price is going aggressively upwards. There is a strong uptrend. Then those guys are most likely aggressive buyers who are pushing the price upwards, right? Then the price reaches a resistance zone. Huge volumes appear in that resistance zone, let's say in here. Also on ask, huge volumes, massive volumes at this price level appear on ask in a resistance zone. Now, who those guys are? Are those guys buyers or are those guys sellers? Well, chances are that some big institutional trader was waiting with a sell limit order in that resistance, and when the price reached that resistance, he sold with that pending limit order. So most likely, those guys are passive sellers, right? That's the context. Now, I'll go more into that in the trading setups and also in the book, which you can download with the link which I'm going to give you later. Right now, this should suffice. This is a very important thing. So you may want to get back to it later because this is basically the core of the order flow. Now, let's move forward a bit and let me give you some tips on how to read the order flow and what to look for. Because if you just look at it like this, then it's just a matrix of numbers and colors and it's weird, right? But if you know what to look for, then it's way easier. You don't need to read all those numbers and all those colors. No way. There are easier ways to read the order flow. So I'm going to talk about those 6 tips one by one to show you what to look for when reading the order flow. Probably the most important thing is high volume nodes. Those high volume nodes, they are automatically printed in this black rectangle in each footprint. And they show where the heaviest volumes were traded at that footprint, right? So the reason I say that those are the most important places in each footprint is that when there are heavy volumes, those places are really important for everybody. Big trading institutions trade at those places. Those places, they indicate that there are strong support and resistance zones. So the most important thing in every order flow chart is the places where the heaviest volumes were traded. And they are in those black brackets, all right, at least with my software. So the first thing which I look at when I read the order flow chart is I look where those black rectangles are. So the next thing which I look for is a delta. Delta is a difference between sum of all those numbers, those volumes on ask, and sum of all those numbers, volumes on bid. So if delta is positive, it gets printed below each footprint, right? So if it's positive, it gets printed in a green number, and it means that ask is bigger than bid. And this should basically tell you that the buyers are more aggressive and stronger than the sellers. When there's positive delta, the price is usually going upwards, usually. Negative delta, that's exactly the opposite. It gets printed in red color, and when sellers are stronger and more aggressive than bid, the sum of all those volumes traded on bid is bigger than sum of those volumes on ask. So in that case, delta is negative and the price usually goes downwards. Usually, not in all cases, but that's the general rule, right? So that's delta, the second most important thing. The next thing, that's imbalances. Imbalances are those blue numbers in each footprint, and those blue numbers indicate aggressivity. So when you see blue numbers show on ask, like in this footprint, then it indicates aggressivity of buyers. The calculation behind this is that you always compare, or the software compares, not you, software compares those two numbers diagonally. And if the number on the right on ask is 3 or more times bigger than the number on bid, then it gets printed in blue and it means aggressivity of buyers. So for example, 18 is 3 times or more bigger than 1, and that's why it gets printed in blue, right? Aggressive buyers. Buyers are way more aggressive than sellers. In here, 12, 3 times or more bigger than 1. And if you have more of those imbalances, then usually that means one side of the market is way more aggressive than the other. If there is a footprint with just, let's say, 1 or 2 imbalances, like in here, it doesn't really mean too much. But if you have a footprint where you have lots of those, like in here, then this is a sign of aggressivity. In this case, we have all those buying imbalances. When they are on ask, they are called buying imbalances, and they show aggressivity of buyers, right? Now, let me show you selling imbalances. Those are selling imbalances. Usually when the price is going downwards, sellers are driving the price downwards, they are aggressive, they are way stronger than buyers. So those are blue numbers, at least with my software, blue numbers which get printed on bid, right? All those. So that's imbalances. Now, if you check those live trading videos, which I'm going to give you access to, you will see that I use those quite often in my trading to see how aggressive the sellers or buyers are. It's a pretty handy thing. Now, another thing which you should look for is volume clusters. Now, volume clusters are pretty similar to the high volume nodes. The logic is pretty similar, but the difference is that high volume nodes, those are only those black rectangles, which show where the heaviest volumes were. But volume clusters, those are areas, like in here, this area. And I look for those with a different order setting. So as you can see in here, the footprints don't show bid and ask, but they only show total volumes at each given price, right? Total volumes. And this makes reading the order flow easier, at least looking for those volume clusters. And if there are heavy volumes, then the software automatically makes the shade of the gray color darker, like in here. So it stands out, and you can tell that a huge trading activity took place in this area. And those heavy volume areas are very important Those are institutional trading areas. Those are very often support and resistance zones. And there is going to be a strategy which I'm going to show you, which is it's based just on trading those volume clusters. So yeah, those are the volume clusters. The next thing, trades filter. Trades filter, that's a special feature of my software, and it enables to filter out all the noise from the market. So as you can see, those footprints have mostly just zeros on bid and ask because all the noise is filtered out from the market and only the biggest trading orders stay. So in here, I set the filter to show only trades which were bigger than 25 contracts. And this shows the big trading activity, right? Only the biggest trades, filters out all the noise. This way, I don't miss any action. Now, the last thing, that's cumulative delta. And this is a really handy thing. Now, usually this is not part of any order flow software, but it is part of my volume order flow software because I think that order flow and this cumulative delta, those just work together so nicely. So that's why I use those two together. So what I look for in here is divergence between price and delta. So in here, this is 1 minute price chart. As you can see, the price is going downwards. As you can see in here, the price is, the delta is going upwards. Now, the delta is basically how the delta, the buyers versus the sellers, developed over time. So if the delta is rising, like in here, then it means that buyers are way more aggressive than sellers in this place. But if you compare it with price chart, you can see that the price was dropping, but buyers were entering their longs in here. So that's divergence between price and delta. And that's another thing I like to use with my trading. So this is how I keep track of all of it. This is my day trading workspace. And this chart right there, this is a 30-minute chart, and it shows just the volume footprints. And in here, I look for those volume clusters, like in here, or right there. And this basically shows me where the biggest action is, where the heaviest volumes are. And it gives me the big overview, which I need to see. Also, this chart has a simplified daily volume profile. Now, the chart below that, that's a trades filter, also a 30-minute chart. And this is where I look for those big guys, those biggest trading orders. Now, this chart, that's 5-minute chart. It's a bid-ask chart. And in here, I like to look for trade confirmations, trade entry confirmations. So I look at bid and ask on this 5-minute chart and also on deltas. And the last chart, this is the 1-minute price chart versus the cumulative delta chart, right? So that's how I keep track of all what's going on in the market. Those 4 charts, those are linked. So they always show the same trading instrument, in this case, Euro futures, right? Now, if you want, I can send you that to Workspace. Just shoot me a message after the webinar and I'll send that over so you can give it a go. Now, let's finally go into the order flow trading setups, the main part of this webinar. There are 2 kinds of setups: standalone trading setups and confirmation trading setups. Now, standalone trading setups, basically you find support or resistance zones using order flow. So you only need order flow software. No need to combine with any other setup. Whereas on the other hand, the confirmation setups, you find support and resistance zones using some other trading method which suits you, which you like to use. for example, price action, in my case, mostly volume profile or view up. So you find support and resistance zones using, for example, that volume profile. And then when the price reaches support or resistance zone, you open the order flow to confirm your trade entry, to confirm that there is most likely going to be a reaction, right? So let's first start with the standalone trading setups. The first one is based on volume clusters. So this is how it looks like. First thing, you need to set your order flow to show volume cells. So no big bid and ask, only the volume cells. It's easier to read, to spot those volume clusters. Now, I like to use 30-minute time frame, but you can also go for 5 to 60-minute time frame if it suits you more. Then what you look for is significant volume cluster. Like in here, that's a place where heavy volumes were traded in that area. And you should look for those volume clusters either within a trend, like in here, that was an uptrend. And within that uptrend, volume cluster got created, or in a rejection. Rejection is, for example, when the price goes downwards, then suddenly reverses and goes upwards, and then you want to look for those volume clusters in that rejection, right? Somewhere in that rejection. So I like to look for those volume clusters in those two places, in trend or in a rejection. And the next step is that you want to see the price move away from the volume cluster. So in here, there is the volume cluster, price moves away from it and creates at least 1 or 2 footprints, whole footprints above it, like in here. And then you wait for pullback. And when the price hits this heavy volume area, you enter long. Now you can enter the long either from this place where that volume cluster starts or from this high volume node from here, right? Now you go long because there was an uptrend. If there was a downtrend, you would go pullback and short, right? Exactly the opposite. Now, the logic behind this is that the price was going upwards, buyers were pushing the price upwards, then the price stopped for a while and heavy volumes got traded there. Buyers, most likely buyers, were adding to the long positions. Then they pushed the price some more upwards, and then there was a pullback. And this is important area for those buyers who placed those long positions in here, because if the price goes below it, they will be in red numbers. They'll be losing. This level is important for them. They placed a lot of their trades there, a lot of their positions there. So they want to push the price upwards from there again. They do that with aggressive market orders. They start buying and they are hoping for snowball effect to start the uptrend again. All right. So they try and defend this zone. And this is the reaction you wait for. This is the reaction you want to participate on. Now, some examples. Again, there was an uptrend. And within that uptrend, heavy volumes traded in here. So the price continues upwards. There's some rotation, but then there's a pullback. And the price reacts to that volume cluster. So this is the place where you go long. All right. Now, another example, this one is based on the rejection. This is a trade we had in our members area on the Euro futures. There was a rejection of lower prices on the Euro futures. And within that rejection, there were those massive volumes traded. Those volumes really stand out. And then we waited for a pullback. And I think that we entered from this place where the volumes were the heaviest. A couple of days later, there was a nice reaction to it. All right. So that's how you can trade those volume clusters which are in a rejection. Now, there are some alternatives to volume clusters. If there aren't any significant volume clusters and you still want to trade the same setup, there is a way to trade multiple high volume nodes, or you can also trade big orders on trades filter. So the strategy is exactly the same, only you don't look for volume clusters, but you look for multiple high volume nodes or for those big orders on trades filter. Now I'm going to show you a couple of examples. So in here, there was a downtrend, and within that downtrend, there were those two high volume nodes. Now, the important thing is that the high volume nodes are next to each other. So when you have two consecutive footprints like those two, those high volume nodes need to be like this, right? And there need to be two or more. Then the price goes below that. The setup is the same. You wait for pullback and you go short from there, exactly from this price level where there was this multiple high volume node, right? You can also do that with the rejection setup. There was a rejection, and within that rejection, there were those two high volume nodes next to each other. So you wait for pullback and go short from there, right? So that's the same setup, only with multiple high volume nodes next to each other. And also the next setup is with the trades filter. So basically you want to see some number appear on the trades filter. It doesn't matter if it's on bid or on ask. You just want to see it somewhere, and you want to see the price move from that number, from those heavy volumes away. So the price moves away from it, then it makes a pullback, and this is where you enter your long. You enter your long because the price went upwards from this place. So most likely buyers entering the longs in here, then they pushed the price upwards. And when there was this pullback, those buyers wanted to defend that zone and push the price upwards again. All right, the logic is the same, only this time we use that trades filter. Now again, two examples. One in here, the price goes downwards from this place, makes a pullback, you go short. The next one is in here, price goes below it, tests again, and short from there. All right. Now you want to set that trades filter so it doesn't give you too many trade signals. So for example, on the Euro futures, I was showing only trades which were bigger than 25, or actually 25 or bigger. And but recently I had to change it. I changed that to 35 because with 25 it just gave me too many signals per day, and I wasn't really able to get rid of all the noise. So you don't want too many signals. You only want to see the biggest trades. All right. Every market is different, so you need to play with those numbers a bit. Now let's go into the confirmation setups. Confirmation setups are used to confirm a trade entry. So you find support or resistance zone using some other way, for example, price action or a volume profile or anything else, so it suits you best. And then when the price reaches that area, you enter a trade only if it gets confirmed by a limit order, by absorption, or if there is divergence on the cumulative delta and the 1 minute price chart. So now I'm going to talk about all those, and I'll start with those limit orders. So confirmation by limit order. What you look for is unusually big limit order, which appears in support or a resistance zone. What that means is a big passive trader has entered his trade. And what I use is 5-minute chart. It is a bid-ask chart, like in those examples. So basically, the price goes upwards in this first example. And imagine that it hit a resistance zone, which you found, let's say, using volume profile. Then in that zone, you want to see a confirmation that some big guy, some big trader entered a short trade, and he entered it with a limit order. So you want to see a huge volume number appear on ask, because limit sell shows on ask, right? That's why you need to see that big number on ask, and it needs to appear in a resistance zone. If it does, then that's the confirmation that somebody big just entered a limit sell order. And when you see that, you go short. Your trade entry just got confirmed, right? Now, the opposite is the price goes downwards and it reaches support. And somewhere in that support zone, you want to see a confirmation that somebody big is willing to trade there and somebody big entered a long trade. So you want to see a huge volumes appear in here on bid, because most likely a huge volumes traded on bid in this support zone, that will most likely be a limit buy, which shows on bid, right? Pending a buy order, when it gets filled, shows in here. When you see that, that's the confirmation of that support, and that's where you go long, right? But the important thing is that this needs to appear in support or resistance zone. You don't trade it just like that, just like a standalone trading setup. No, you need to see that in a support or resistance zone. Now, some examples. The price goes downwards and there is a support zone. So the price hits this support zone, which you found, let's say, using volume profile. And in that support zone, you want to see a confirmation. That confirmation would be heavy volumes traded on bid, most likely by a limit order, most likely. So that's the confirmation. When you see that, you go long, right? That was a strong buyer waiting with his pending order. Now, in this example, the price went upwards, and imagine that it hit a resistance. Now, in that resistance, you want to see a confirmation that somebody big entered a short. Now, if somebody big entered a short using a limit order, it will show in here on ask, right? Now, you need to see those heavy volumes in here, and then you go short. Now, how you tell that those volumes are heavy? So 211 contracts, is that heavy volume or no? Now, the rule of thumb you can start using right now is just look around and you will see 211. Is that a big number or no? If you compare it to the rest. Yes, in this case, it's pretty easy to see 211, that's unusually big number. Most likely big seller with a limit order, right? Now, in the book, which I'm going to give you later, I also say that when you start with order flow, you should focus on just one trading instrument only. And the reason is that you need some experience with that trading instrument, and you need to know, apart from many other things, what the standard volumes and unusual volumes are in that instrument, and also in every trading session. So, for example, Euro futures, European session, 211 contracts, that's above average, right? when you trade that pair or that futures instrument for some time, you will know, right? This will change during the European and US session overlap, but during the European session, if such a huge number appears in a resistance zone, that's some unusual activity. All right. Now, another thing which I wanted to talk about is how you can tell that those guys are sellers. Because based on what I told you earlier, this could also be aggressive buyer, right? So how can you tell in this case? Now, the trading institutions, those guys, those are not stupid. So when there's an uptrend, those guys don't buy with aggressive market orders at top of the uptrend. No way. Especially no way if there is a strong resistance, which they see. Those guys, those use volume profile, they know where the major resistances are. So price is in uptrend without any major pullback and reaches resistance zone. Now, those guys must be crazy if they entered a long in this place, right? So most likely that's not aggressive buyers entering longs at a resistance. That would be crazy. Most likely that's sellers. A strong seller who was waiting at a resistance just pulled the trigger and went short, right? So that's the context I was talking about. Now, another confirmation, that's absorption. Good news is that it's easier than the limit confirmation. You just look for unusually big volumes which appear on bid as well as on ask, both, right? And this needs to appear in a support or resistance zone because that's a confirmation trading setup. So what's going on with the absorption is that buying or selling pressure is being absorbed. I use 5 or 30 minutes bid-ask chart for that. And I look for massive volumes like in here, traded on bid and on ask. So let's talk about those two examples. In the first one, price goes upwards and imagine that it hit a resistance zone. Now, in that resistance zone, you want to see some confirmation. In this case, that's the absorption. And what you see is huge numbers appear on bid and on ask. And basically that means that buyers were pushing the price upwards, but then sellers started to sell and they absorbed all that buying pressure. And they didn't really gave any chance to those buyers to push the price upwards, just a little bit. But then buyers ran out of fuel and the price went downwards, right? That's the absorption because buying pressure got absorbed. Now, the opposite is the second example when the price was dropping, sellers were selling aggressively, pushing the price downwards. And in here, let's say that was a support zone. So in that support zone, massive volumes got traded both on bid and on ask. And what happened is that sellers were selling, pushing the price downwards, but in here, the buyers bought everything the sellers had to sell. For that reason, the price didn't drop downwards again, but it stayed in here. And at this place, buyers were buying like crazy everything the sellers had to sell. And eventually, sellers ran out of fuel, and buyers took over and the price went upwards. So that's the absorption. Heavy volumes, unusually heavy volumes, traded both on bid and on ask. Now let me give you some examples. So In here, the price was dropping, hit a support zone, and in that support zone, massive volumes got traded on bid as well as on ask. That's the absorption. When you see it, you go long. Now, the absorption sometimes takes some time to appear because the trading institutions don't just place all their trades all at once in the market. They use algorithms and they use iceberg orders. So sometimes it takes some time for you to identify the absorption. But when you identify it, you just enter your trade, right? That's the confirmation. Now, another example, the price went upwards. Imagine it hit a resistance zone. And in that resistance zone, you wanted to see some kind of confirmation. In this case, massive volumes on bid as well as on ask. That's the absorption. All the buying pressure got absorbed and then the price dropped, right? So that's the confirmation. Now, another confirmation, this is a confirmation which is pretty favorite among my students because this is very simple to use. That's the divergence between price and cumulative delta. So what he uses is a 1 minute price chart and below that cumulative delta. And you just compare those two. So the divergence is when price is dropping, like in here, this 1 minute price chart is dropping, but cumulative delta is rising, which means aggressive buyers are entering the longs, like in here. So in the same area, price is dropping, but buyers are entering the longs. That's the divergence, and that's the confirmation. Now, this also needs to appear in a support or in a resistance zone. I know people who have some trading setups, trading strategies built just on cumulative delta divergence, but I prefer to use it just as a confluence, just as a confirmation with other trading setups like volume profile based setups. All right. So for me, this is just a confirmation, but you can also give it a try and trade it as a standalone trading setup. Now, imagine that there was a support in here, and somewhere around that support, you saw that divergence, price dropping, delta rising. So this is the signal for you to enter the trade, right? If you check those videos, which I'm going to give you, those live trading videos, you'll see that in most of the cases, I actually use this one. I use the cumulative delta divergence quite a lot when I'm looking for trade confirmation. It's a very handy tool. Not a holy grail because there are still those limit orders which mess things up, but this is as close to holy grail as it gets, guys. Now maybe there is a holy grail. We just haven't found it. Now, another example. Price is rising, but at the same time, cumulative delta is dropping. And if you see that in a resistance zone, then this is a confirmation. Price tends to follow delta, right? So eventually the price starts to drop as well. So sort of you can say that cumulative delta will tell you what will happen in the future. Now this sounds pretty optimistic, but again, cumulative delta, it's not a holy grail, but it's a pretty good tool, especially when you use it together with order flow and volume profile. Now, there is way more to it regarding order flow trading, because you can use order flow for take profit or stop loss placement, for position management, or to tell the strength and aggressivity of buyers and sellers. There's more to it, but there's not enough room in this webinar to talk about all. But again, if you download the book, everything is in there, so you can also study all that. Now, if I can point you to some further education, then you definitely want to check this website. It's my website, trader-daily.com. There are a lot of articles, a lot of videos. There is a section which is called Daily Market Analysis. It is in here. And in that section, almost every day, there's a new, usually day trading analysis, which I do every day. So you may want to check that out. It's completely free, almost every day, new analysis right there. Now, if you really want to learn and improve significantly and bring your trading into next level, I think you do, because you are in this webinar and stayed until the end. So I think the next best step for you would be enroll in one of my trading courses. There is the Elite Pack, and also there is the Oriflow Pack. Now, the Elite Pack, you can get it in here, trading course and tools, and this focuses on trading with a volume profile mostly. So you can use the volume profile for day trading as well as swing trading. And if you are more of a scalper and day trader, then the Oriflow pack is for you. If you are interested in Oriflow, if you liked what you saw today, then you definitely want the Oriflow pack, which you can get in here where it says Oriflow. Now, what I have for you today is a special offer for that Oriflow pack. This is what it consists of. It consists of Oriflow video course. That's 12-hour-long video course on trading with the Oriflow. Now, you will also get Oriflow software, which I developed for NinjaTrader 8. And also in that pack, there is a set of my volume profile indicators, which I developed. Now, why there is volume profile indicator in Oriflow pack? The reason is that Oriflow and volume profile work together really nicely. This is like the best combo of two indicators I found so far, because you use the volume profile to identify strong support and resistance zones. You use it to see the big picture, and then you use the Oriflow to trade those supports and resistance zones. So this is great combo of two indicators. And in that video course, I teach you how to use them both together. So that's why volume profile pack is also included in that Oriflow pack. Now, as a special bonus to the Oriflow pack, there is this free tech support. And what that means is that this guy, this really nice guy, will join with you on a call using TeamViewer, and he will install everything for you. So he will install NinjaTrader software. He will set you up with data. He will install all those indicators, install all my trading workspaces. So he'll do everything for you, including the authorization and everything you will need. So this way you can focus on learning how to trade and on trading itself rather than setting everything up yourself. So that's the special tech support. Now, if you bought all that separately, it would be $647, but I'm going to give you a discount as a special thanks for staying until the end of the webinar to watching the whole thing. I'm going to give you 40% off, and this will be only for $397. Now, I'm going to limit this offer, and it will expire February 27th, and it will be only for the first 50 people. All right, so I need to limit it somehow, so it's only limited. Now, if you go to my website, there will be this banner. It will say webinar sale. If you click it, it will get you directly to that special webinar sale. All right. Now, here is the book which I promised, Oriflow Trading Setups, a book which I released just a couple of weeks ago. This is a link where you can download it. trader-dale.com/freebook, you'll need to enter your email address, and right after that, this book will get automatically sent to that email address. All right. Now, in that book, there's a page with a secret link and with a password. And with that link and that password, you can enter a secret web page with all those live trading videos where you can see how I use all those setups I showed you today. Also the setups from this book, all those methods, how I use it in real trading with order flow. So you definitely want to check those videos out. The link and the password is in the book. All right, so make sure to check that out. So at this place, I would like to thank everybody for attending the webinar. I'm so happy that so many of you showed up. Now, I know that there were so many questions in the chat, and it wouldn't really be fair if I just answered one or two in here and leave all the rest. So what I'm going to do, I'm going to ask you to send all your questions to this email address, contact@trader-dale.com, and I'll answer all of them, all of those questions you may have. And what I'll also do, if there's enough of those questions and if I think that other people can benefit from them as well, then what I'll do is I'll do an article, Q&A article, which I'll publish on my website. And in that article, I'll answer all those questions, and so other people can benefit from those answers as well. All right. So shoot me your questions to this email address, and I'll answer them all. So again, thanks so much for coming here today. Thanks NinjaTrader for having me here again for the fourth time. I'll be looking forward to seeing you again, maybe in some next webinar, maybe on my website, or maybe in some of my trading courses. So again, thanks so much for coming here today, and I'll see you later. All right. So until then, happy trading.
I would like to give a special thank you to Dale of Trader Dale for a great presentation today. Everyone in attendance here will receive an on-demand recording of today's event. Please keep an eye out for that email. NinjaTrader ecosystem is pleased to sponsor these weekly vendor events as a value-added service for our clients. If you find value in these events, we hope that you will join us on a regular basis. We'd like to remind you the information that in this was provided of Trader Dale's and not of NinjaTrader. All information is for educational purposes and should not be construed as trading advice. Again, we appreciate the time you spend with us. Enjoy the rest of your day, and happy trading from everyone here at the NinjaTrader ecosystem.